Welcome back. You're still tuned into Midcap Radar, where let's talk about Neogen Chemicals. Quarter 3 performance was disappointing, with profits down over 90% on a YY basis. Margins contracted, while revenues also came down for organic and inorganic chemicals. Harin Kanani, the managing director at the company, is joining us now. The stock is lower by 2.5%. Mr. Kanani, good afternoon. Thank you for joining us. Can you explain what really happened this quarter? There's a decline on a sequential and on a YY basis. Are you seeing some recovery in demand across the segments that you cater to in Quarter 4 so far?
Hi, thank you for having me here. Good afternoon, everyone. In the last quarter, basically, we had a slight decrease in our standalone performance, which was mainly driven by lower volumes on the agro side. The top line was basically was lower just because the lithium prices were historically high, and now like 1 year ago, and now they are at historically lowest price world over. So this has been the lowest price in last 2.5 years that we have seen for lithium, as well as our other raw materials like bromine and other specialty organic chemicals are also on the lower side. So basically that reduced our top line. So if you look at standalone performance, while it was not so bad, on the volume side, we have actually done 10 to 15%. So if you actually do the correction on the prices, we have done actually 15% higher in spite of lower demand in pharma and agro segment overall. Generally, pharma segment did significantly good. The agro was where we saw a little bit, which is mostly in the international agro side. We saw there was a decline, and that is what stopped us from fully utilizing our organic capacity, which has come online. So that put a little bit pressure on the margins. The main impact, however, was that when the lithium prices, so we were able to manage the journey from $15 to $80 in last year, and then 80 to now coming back up to $20-$25 till last quarter. But the last decrease from $20-$25 to $12 was what took us by surprise. So that basically impacted our standalone performance. And also we had recently done an acquisition of Bulli Chemicals. So that Bulli Chemical also was completely lithium metal based. And there it took a while for us to get all the customer approvals post-acquisition. And in the meantime, the lithium prices changed. So there was again a one-time change where we had to sell the high inventory raw material at a lower market price today. So that was mostly the effect of that. However, barring that, I think our performance was on lines. And we are also starting our battery materials plant this quarter. But there were some pre-startup expenses which were more revenue oriented and were not capitalized. So that impacted our consolidated performance. But on standalone, we are pretty happy with our performance, except with a lower agro demand. We have seen pharma start recovering. Some of the segments in pharma are still having challenges, but majority of the pharma segments have recovered. And but some of the bulk pharma segments are having a problem. And agro is somewhere where we are still expecting recovery in the second half. But with our battery materials coming online, we feel next year we will be able to continue the performance the way we had expected. And also, sorry, go ahead.
Right. So just wanted to interrupt you there. You had a couple of questions. So you spoke about bromine prices, you spoke about lithium prices. Have they bottomed out, or do you see some more pain going ahead?
I think lithium and bromine both have bottomed out. We are seeing a very strong push from the raw material makers. I mean, they're ready to stop production or reduce production. So they are taking steps in that direction. And maybe lithium, it's very difficult to predict because the biggest consumer of lithium today is China, while the production is world over. And it's very difficult to predict China. But what we are seeing is this is already half of the price which is expected long term in lithium. So we feel lithium should have bottomed out, if at all, maybe 5-10% correction, but not more than that I'm expecting in lithium going forward.
Okay, so the new plant that will be opening, and you've said that the peak production revenue could be around 2,500 to 3,000 crore rupees, depending on lithium prices. On what lithium price base has that revenue guidance been or projection been made?
So we've taken a current lithium price on the lower side of it, and on the higher side of it, what we expect around $30-40 would be a long-term kind of an average. So we've taken that for our lithium price calculation. So let's say between $15 to $35 of lithium is a range which we have taken.
So do you think it can go back to those $80 level, and that would mean an upside risk to this guidance as well?
So if it goes to $80, I mean, I don't think it will go to $80. Everybody had expected lithium carbonate to be, let's say, short term at around $40-45 and then stabilizing it around $20-25. Even if it goes a bit lower, we feel it will be somewhere between $15 to $30 is a range. But yes, because it has gone so low, there is a chance that in 2000, I mean, some of the mining companies are stopping their mining activity, and we feel by 2026, you may see an increase. But look, this lithium prices for us are basically pass through, except for that crazy journey from 15 to 18 and back to even 10 or $12 has happened. But except for this quarter, we've basically navigated that well, and we are able to mostly pass through that. So we basically focus on our absolute EBITDA margins or ROCs. That is what is the concern. And that remains independent of whatever is the lithium price.
Well, thank you so much for your time here at CNBC TV18. We wish you all the best for the rest of 2024. But let's now slip into a short break. We will